Let's talk about crypto and let's talk about economics. Bitcoin price predictions, Kadena price predictions, Fed rate hikes, and why I say that we're headed towards the worst economic collapse that the world has ever seen. But what does that mean for Bitcoin and the rest of the crypto market? Ready? Let's dive deep. So according to usnews.com, Feds raise interest rates by 0.5% in an aggressive move to fight inflation. The central bank will also begin selling off $4.75 billion worth of securities each month starting in June. This article was published on May 4th of 2022 at 2:14 p.m. Now, if we take a look at the Fed's M1 money supply, it's overwhelmingly obvious, guys. If you guys are new to crypto, you guys are just getting into this space, this is what crypto is designed to prevent against. Crypto prevents governments from being able to manipulate a market. Nobody understands, most people don't really realize that the recent boom and growth in the economy, when every business was putting in new all-time highs, stocks were going to the moon, people were making stonks left and right, it was just recipe for disaster. So the Feds have committed to lightening their balance sheet. And what that means, when the M1 money supply was going up, what the Feds do is they print. So what happens when the M1 money supply is actually going up? What the Fed is doing is the Fed is putting more zeros on their balance sheet. $1 trillion, we go over to a computer, we put a zero. With that bank account, they go and buy government debt, government treasuries, bonds. So the Feds were buying all these bonds. Looks like about $20 trillion worth of bonds and securities. Now we're in a really bad spot. Inflation's going up. Gas is almost $5 a gallon. So what the Feds are doing is they're saying, hey, we're going to sell off these securities. So the Feds pump up a coin or pump up the stock market. The Feds legit pump up the stock market. And then whenever they feel like it or they get into a horrible position, they have to dump the stock market. So now the Federal Reserve is literally dumping the market on everybody. So everybody's going to suffer because the Feds wanted to have fun and print a bunch of money that they didn't work for, that they didn't earn. And what that does is, on top of the 33% in taxes you're paying, you're now paying $5 per gallon of gas. The $1,200 in stimulus checks that they gave out to everybody is already $5,375 today, already in 2022. That $1,200 stimulus check they sent out to everybody, the average American has spent an extra $5,375 this year, just this year, in extra expenses. Now, here is the M2 money supply. The M2 money supply reached roughly, $21 trillion. So in order to get the balance sheets back down, in order to get inflation under control, at the very, very least, they are going to have to take out roughly, it looks like about $6 to $7 trillion out of the market. So we're going to do 7 trillion divided by 47.5 billion. 147 months. Right now, the Feds need to raise interest rates, and they also need to lighten their balance sheet by $47.5 billion just in hopes to get inflation under control. With their current setup, at this rate, we are looking at 147 months of a complete catastrophic meltdown of the market. The Feds have never been able to raise interest rates and not send us into a complete economic crash, recession, Great Depression. So things are going to get really bad. And as they are raising interest rates by 0.5%, next is going to probably be 0.75%. And how they are calculating inflation will blow your mind. Watch this clip from Anthony Papalano.
The April inflation data just came in, and boy, is it bad. Breaking news, 8.3% year-over-year change in consumer prices. Now, if we dig into the data, Charlie Bolillo breaking down exactly where that inflation is being derived from. First, you can see that gasoline is up 43% over the last 12 months. If you look at something like new cars, it's up 13%. Even though they are actually manipulating the way that that is calculated. Then the big one to me is food at home, up 10.8% over the last 12 months. That is completely unsustainable for the average American family. Now, part of the problem is that nobody believes the CPI metrics. They're literally manipulating the way that it's calculated. There's a brand new article out in the Wall Street Journal, and it is probably the most insane article you're going to read in all of 2022. Now, of course, this article breaks down that there are 477 workers employed by the Bureau of Labor Statistics, and their job is literally to go to small business businesses, grocery stores, and corporations and simply write down on a piece of paper or on a tablet what's the price of various goods at those stores. Now, when they go and do this, there's a lot of complexity involved. Imagine going to the grocery store and having to help measure inflation, but your job is to go find soup, but make sure that it's not low sodium or high sodium, that it's no sodium soup. And you gotta make sure you get the right brand, and you've gotta get the right number of ounces. And so, of course, there is human error. And in the 21st century, we're counting on individuals with a tablet or a pad of paper to go into stores, try to find in the entire grocery store the one product, and then write down what the price is and track that month over month over month.
Pretty crazy, to the point where it's almost kind of disturbing.
We see that new cars, all of a sudden, yesterday, it gets announced that they're going to change the way they calculate those price increases. And then you look at something like shelter. They're telling us that rent is up close to 20% year over year on the national average. Home price is up about 20% national average. So how the hell is shelter only up 5%? Well, that's because, of course, nobody believes this number is only 8.3%. The real inflation rate in the United States is probably closer to about 15%. This isn't going away anytime soon. You can see that the United States, it's at the bottom of the list. You can see here that the US at 8.3% is only better than Spain, Netherlands, Brazil, Poland, Russia, Argentina, Turkey, and Venezuela. It's not exactly the list that you want to be listed on if you're the United States. But also a key thing to look to in the future is that there's going to be a base effect. Remember, last year, starting around June, inflation went over 5%. It's been over 5% since. And so now if inflation number comes down, that's just a year-over-year change, but it actually means that we're compounding at 5% or more inflation year over year. And that is not good situation. And so expect for that inflation number to come down. It peaked in March at 8.5. In April, it was 8.3. That doesn't mean inflation is actually getting better. It just means that there's a base effect at play here and that inflation is still raging on. The Federal Reserve is going to have to increase interest rates, and they're going to have to address this situation, because if they don't, inflation is quite literally going to tax everyone.
The fact that it's 2022 and we have all of this great data tracking software in real time. I can go online and tell you what the price of a Snickers is right now at Walmart. You can use API access blockchain technology, but yet the Federal Reserve pays 475 people on a salary basis to go to Walmart, pick up a Snickers, write down the barcode, write down the price, and then submit that paperwork. This week they might use Snickers, tomorrow they might use Skittles. It is so goofy, right? And it's all designed to manipulate you, the innocent retail investor, while Wall Street just makes ungodly amounts of money. They short it, they play bank, they screw retail investors. Now here's the secret sauce right here. The Federal Reserve has what's called a overnight reserve repurchase agreement. Treasury securities sold by the Federal Reserve in a temporary open market operation. Right now, the feds have $1.9 trillion in their reserve balance sheet. So when the market gets really bad, the feds can put money in. 1.9 or $1.865 trillion. If the feds blow that, you're talking about another 39 months on top of the 147 months. And this is all in attempts to get inflation under control. But as the market's tanking and businesses are making less profit, they tend to raise up prices on things outside of the fact that the cost of everything is going astronomical. Grocery stores are out of formula. We're talking about a food crisis.
In Memphis and Nashville, 52% of stores have no baby formula. Houston and Des Moines are reporting similar shortages. In San Antonio, a city with an unusually high percentage of families with small children, 57% of all stores in the city have no baby formula. Those are the numbers. Journalist Savannah Hernandez went to see for herself what the reality looks like. She went to 8 different stores in Texas, and not a single one of them had any baby formula to sell. Watch.
We talked to a couple moms outside who said that they've been having a really hard time finding formula, and so this is what we're seeing right now. The second Target that we've been to, we first went to a Target in Louisville, and now we're in Frisco, and as you guys can see, it's pretty much the exact same thing here. Grocery stores pretty much empty, no formula to be found. I've talked to a couple moms who were telling me that people have spent upwards of $150 on formula on Amazon. Some moms can't even find the formula that their baby requires. One mother telling me her child was constipated, needed a specific type of formula, couldn't find it, so that's what's going on.
I'm going to stock up on some ramen and just some basic supplies in case times get really tough. You got to have some type of food to survive off of. things are going to get really hard for a lot of people. Now, what does this mean for the crypto market? Very, very hard to say because of the whole Luna meltdown. Before the Luna meltdown, I was saying that Bitcoin was going to have a hell of a time breaking below 28,000. Now that level has been broke. We've recovered for a short period of time, but I don't think it's going to be enough to stabilize price considering the market conditions. Until a lot of the world starts to really realize the value in Bitcoin and the power that Bitcoin has to protect your money in times like this, the problem is no retail investors are going to have any money. People are getting really hard on times. Personally, I can barely afford to go to the gym or drive around. Like, just filling up my Hummer is so expensive. It's like times are getting really tough, and I make, $4,000, $5,000 a month sometimes, and I can't live. I can barely get by. I can barely pay my bills. So times are going to get really tough. And this is why I'm buying Bitcoin and Kadena only, because they are proof of work. We saw what happened with Luna and proof of stake chains. They're all having that same Ponzi-nomic architecture. When the market's really bullish and anybody's willing to throw money at anything, it doesn't matter. But right now, times are getting really tough. So the first thing I want to point out is Bitcoin dominance. Bitcoin dominance is on its way back up. I never thought we were going to actually see Bitcoin dominance get back above 60%. I'm almost positive we're going to see Bitcoin regain its dominance, because what's happening now is people are realizing how bad all of these Ponzi proof of stake coins, Ethereum can't scale, Solana will have to be centralized. They'll have to centralize block production to scale. AVAX just misled everybody with their subnets, thinking that subnets could actually scale. Subnets can't scale a blockchain. And what these guys are doing is they're paying these millionaire investors are paying YouTubers that will sell out and promote any crap coin to suck money out of your wallet. Now, with that being said, the market got really, really bearish in 2017. And there was a point there where we pretty much stayed at bottom. People thought we couldn't break below 5 or 6K. And then all of a sudden, market got really, really bad. Price plummeted down. So if we just take a percentage basis and say when it broke that support, it fell about 30, 45%. So if we say that Bitcoin was sitting over here at 28K, and the market does tank down, like Monday, if the USA market's open and we, plummet, 30% would bring us down to about 20K. Now, Bitcoin has never returned to the previous peak of a bull run. So Bitcoin's all-time high in 2017 was 19,400. I want to say no time in history has Bitcoin ever went into a bull run and then returned down to that previous peak. It's hard to say, are all these celebrities, is everybody going to start basically running to buy Bitcoin? I thought Bitcoin was going to decouple from the S&P and that was going to be the go-to, but I don't think that there's enough. I think Bitcoin will consume a lot of debt from other projects selling off, and a lot of people are going to start to see the potential in Bitcoin, along with things like Kadena. We already see Kadena being one of the best performing assets right now in the industry. So if I was looking to play the game on Bitcoin, we can see over here, we had this little previous area of support right here. I'd be looking for DCA targets on Bitcoin around 26,500. We have another one at 24,600 and one more down there at about 22,500. I don't like being that super bearish guy because it's got me absolutely annihilated. And Bitcoin is such a dominating player in this space. It's such a good asset. It prevents governments from having the power just to print money out of thin air. It is a reserve currency, and it's becoming the global reserve currency, which is huge. So those would be my 3 DCA targets. Now we talk about Kadena on the other hand. Kadena found bottom at about $1.45, give or take. And ever since, it's been doing phenomenal. It ran up from bottom over 87% in 48 hours. After the Luna debacle, people are starting to realize the difference between proof of stake and proof of work. People are starting to really realize that the elite Wall Street investors came over here into the crypto market and saw an opportunity to prey on innocent people, and the lack of intelligence in the complexity of blockchain. They can make things up and talk way over your head and make you believe it, and they're so good at it. So that being said, Kadena is doing phenomenal. I have DCA targets set up on Kadena all the way down to $1.15, but I highly doubt we're going to break that $1.49. But again, I didn't think we were going to be down this low. With a complete meltdown in the stock market, we could easily see Kadena down to $1.15, but it has so much upside potential. If I didn't have any, I would have already been FOMOing in at $2.16. I just would never let this type of an opportunity, slide by. So I would say DCA targets on Kadena would be $1, $1.25, $1.50, $1.75, and $2. And that's a wrap, guys. So things are about to get really bad. the best thing you can do is just to DCA into really strong assets. We saw Kadena on the 83% in 48 hours. Obviously, the market's super bearish, and to see an asset like Kadena being able to just out of nowhere, just the community stepping up, everything's coming into place. We have DEX launches, we have NFT marketplaces, we have new projects, we have new protocols, we have the safest and most secure blockchain in crypto history, the most scalable, secure, proof of work, layer 1 blockchain. Bitcoin is our store of value. Kadena is our smart contract blockchain, and it's going to change the world. Love you guys.